Hello ladies and gentlemen, welcome back to the next section. Really excited to be going through this section with you. Hope you had a nice break from the last section, which was quite long. Just a brilliant section coming along, and the reason I say that is I had a bit of a disaster. As you can see, I actually changed my top, and that's because it's been 2 days since I filmed the last section. I did some filming and basically I lost it all, right? I deleted it by mistake, and then I went on a 2-day journey trying to recover all of it and trying to figure out the programs that probably people use, even the police might use, to recover data that criminals have deleted off hard drives. And oh my god, I tried everything. And the reason I love sharing this with you guys is because, you know, I like to keep it real, genuine, let you know that I go through all of these things as well, that probably everyone goes through. You know, I'm no more special or different to anyone else. I'm just basically normal like everyone else, and I go through disasters, and I thought I wanted to share that with you and let you know that I had a complete disaster for 2 days trying to recover everything, and then I couldn't save anything to the drive, and it was a complete disaster. Okay, and I went and did a whole journey, and you know what, saying that, I'm a positive person, and I think that's why I've done well in trading, and I wanted to share this with you because it's so relatable to trading, isn't it? You know, you have disasters in trading, and it's how you deal with them and how you view them, right? So this has happened. I didn't let it get to me too much. I tried my best, obviously, to recover whatever I'd lost. It didn't happen. I used it as an opportunity to actually see, how can I actually make this section even better this time than the first time I recorded it. I reviewed a few things, and it's going to be brilliant, actually. I'm really excited because it's going to be even better this time round that I record it. There's a couple of things I've realized I want to put in here to make your life easier when it comes to you analyzing fundamentals, not only during this course, but for many years to come. And that's what this spreadsheet is all about. It's really and myself, how can I make your life easier, my life easier, when we're analyzing economic data? It's hard enough as it is. We're getting so much data being thrown at us. We really want to simplify it as much as possible without losing any edge in terms of the details, but actually getting ourselves ahead of what other people are doing. And as we know, people are completely lost. They just try and, you know, read every piece of data, and we're not here to do that. And that's basically what the last section was about, this section's about. And anyway, look, the point is, really positive despite what's happened and lost a bit of data. I'm going to make this even better this time around. So one of the things I realized, so what I did over the last couple of days, even as I was trying to recover things, is I did review some of the things we did in the last section, and I'm always doing that anyway, to see how can I make things better. And one of the things I want to add in, if it's okay with you, is when I was reviewing it, I realized we didn't have the trade balance in here. I want to put it in here. It's not actually that much of a primary piece of information, so if you don't want to put it in, don't worry too much, but I think it's really nice to have it in here. I've never really looked at it. I mean, I'm aware of what the trade surplus or deficit is for the country that I'm interested in, of course, and recently, especially in recent times, US, which is the country I follow a lot, they've run a persistent deficit, and it has been a drag on GDP, but it's been a consistent drag, so the market hasn't really been looking at it. I've never really bothered putting it on here, but I think we should put it on here just to get a complete picture, because I don't know how aware you are of how GDP is calculated or the components that make it up. Don't worry if you're not. I'm actually going to do an amazing section in the course on GDP. We're going to cover GDP, and we're going to cover the components and how it's calculated. For those of you that are familiar with economics, you'll know there's different ways of calculating GDP. There's the expenditure method. There's obviously looking at total output. There's the income method as well. They all equate to the same thing, and we'll talk about this. Don't worry if a lot of this doesn't make sense to you, but ultimately, obviously, we're trying to calculate the total sum of stuff, basically, goods and services, total output produced by a country in any given year. Ultimately, for not only for trading, but for most things, this is what matters. GDP, right? A country's economic growth or lack of it. Now, of course, there will be arguments that, hey, that's not the only thing that matters. Obviously, people's happiness matters, and we'll talk about this during the GDP section. But, you know, that all comes down to philosophy and what you think is important. And, you know, is an economy growing the only thing that matters? You know, I'm not here to teach you philosophy or even deep economics and, you know, the morals of economics. I'm here to teach you to be a trader, okay? And from a trading perspective, this is definitely what matters, right? If an economy is growing, that's where money is going to flow into. Markets are going to do well. If an economy is not growing and it's contracting, markets are not going to do well. It's as simple as that, right? From a trading perspective. You know, how that matters for quality of life and all of that is a completely different matter. The point is, from a trading perspective, generally you want an economy to grow at a reasonable rate. You know, obviously in accordance with the capacity of that country. And again, a lot of this, I don't want to scare anyone and think, hey, I don't understand any of this, MV, or maybe you do. But even if you don't or do, it doesn't matter. We're going to cover it in the GDP section. I just want to start bringing it up here. Now, one of the BEA, the Bureau of Economic Analysis in the US, the government department that reports on GDP, the method that they, the way that they lay it out is the expenditure method, and we're going to see that, which is the one that pretty much everyone is familiar with. So it's C plus I plus, don't worry, I'll tell you what all of this is, plus exports minus imports, so net imports, that is. Okay, that section there, just do that in a different color. Okay, hopefully you can see that, net imports. Now, the reason this method works for GDP, because if you think about how much output a country produces, that output, something happens to that, right? When things get produced, new items get built, you know, when iPhones get built, what happens? People buy them. So you can almost measure how many items are being built by how much people are buying, because they have to equate, right? Because obviously people are buying this stuff. So that is why the expenditure method works very well. So we want to see how much, we know consumer spending, you might have heard a lot about this in GDP, that hey, consumer spending is good or bad or whatever, and a lot of traders and economists and, you know, hear about all of this. Is very important, and that's because this makes up the bulk of GDP. Consumers buy the bulk of goods, so that's where that part of the formula comes in, consumer spending. Business investment, something we'll talk about as well, you know, in plant machinery, businesses obviously invest in a lot of things, those things are being produced, so obviously we need to count that into GDP, and it obviously benefits a country's living standards and ultimately growth, right? So that's important. Then we've got government spending, right? Government spend on things like roads, hospitals, schools, that helps a country grow, so obviously you need to count that. Now, typically, I don't, I'll come back to government spending in a second, but I don't actually look at it that much, not in a set format anyway, because there isn't necessarily a set format. Then we've got exports and imports. Obviously, if a country is exporting things, it's producing them. So the fact it's producing them is good, right? Because obviously exports being produced benefit an economy, you know, jobs are created, and it's generally beneficial, and money comes into the economy because people obviously from abroad buy those goods. Imports have the opposite effect, negative, because if you're buying something from abroad, you didn't produce it as a country, right? So therefore you didn't necessarily benefit from that production, that sort of factor of production. So those two things are netted off. Again, don't worry if a lot of this doesn't make sense. We'll obviously cover it. But the point is that with a lot of these things, you know, consumer spending, business investment, ultimately it's covered in all of these surveys, right? Surveys and and pieces of output data, covers these sections quite well. Consumption from the consumer. If you think about it, payrolls, right? If people are getting jobs, what are they doing? They're spending. So it's a big influence on consumer spending. So we know these part of the equations ultimately, right? In fact, let's take that off, right? Because I don't want too many of you to get too confused and think, oh my God, what's going off on formulas and things like that. And really it isn't, okay? Don't worry too much if it doesn't make sense to you. It's very, very simple. Ultimately, GDP is made up of the consumer, business, government, and then export imports. That is it, okay? It's really as uncomplicated, as simple as that. The point is that all of this data that we're watching throughout the month, and in fact, you can see why it's so useful for me to explain this to you very briefly right now before we go and do the due diligence section and check that all of this data is in fact in the right places, which was the purpose of this section. Ultimately, why do you think we're looking at this data? Why do you think traders look at this data throughout the month? Why do you think they care where manufacturing, services, payrolls is? Because it all boils down to GDP. As I said, if an economy is not growing, markets are not going to do well. It's as simple as that, right? What is the whole purpose of an economy? It's, again, from a trader's perspective, I know some people will say, hey, you know, human race can do perfectly well without economic growth. And yeah, that's philosophy. And I agree with you to some extent, you know. Does money equal happiness? Not always, right? And all of that, you could write books on that. But that's not what you're paying me for. You know, you're paying me here to build you something that's going to give you value as a trader. And as a trader, that's all that matters. Is GDP going to go up? Is it going to go down? You know, obviously, what's it going to make the FOMC, the Federal Reserve, do with interest rates? It all boils down to GDP ultimately. And obviously, high GDP can then cause high inflation and blah, blah, blah. It's all boils down to GDP. So like I said, what's the point of us actually... Why do traders even watch this information every single month? Well, because when payrolls comes out, if the economy is producing jobs, right, who is getting those jobs? Consumers. They're getting what? Wages. What are they doing with those wages? Spending them, right? So can you see? Without jobs, there's no consumer spending. With no consumer spending, GDP isn't going to go up. The economy is not going to grow. That is why traders are watching all this data, right? Services, manufacturing, business investment here. You know, are companies in the manufacturing sector feeling bullish? Are they investing in plant and machinery? Are they looking to grow? Are they willing to expand? Are they looking to produce more things, right? That's going to feed into business investment, which is going to drive GDP, okay? Retail sales, are consumers spending in the retail sector? Yes, okay, that's going to drive GDP. You know, FOMC, what's the FOMC doing? Is it lowering interest rates? Is it stimulating the economy? Yep, that's going to drive GDP. Can you see everything comes down to GDP? You know, is inflation running too high? Oh, you know, is that going to be good or bad for GDP? Is that going to affect economic growth? Is the Federal Reserve going to raise interest rates? And you know, we're going off on tangents, and I didn't really want to do this, but the only reason I mention a lot of this is because I want you to realize why we even look at economic data, right? It's because of all these things, and I'll probably repeat myself in other sections in terms of this, but point is, I want to introduce the trades balance. It's not something I've ever really looked at, because I've always focused heavily on these sections, because ultimately they drive around 70-80% of GDP, so I've always focused on that. Government spending here is a bit of a tricky one because there's no set schedule. You know, obviously I agree, you do get reports on what the budget deficit is, budget surplus, all these things, and obviously right now we're running heavy deficits because of obviously COVID and so on, but when you watch this course, I don't know, maybe the government isn't running so much of a deficit, and those things do get produced. But the point is, in terms of government spending, governments spending bills, these things can't happen at, you know, arbitrary times, and they need to pass through political decisions, and politicians need to agree on these things and debate them, and tax rates, and there's so many. It's a minefield in itself. You can't put it in any sort of format like this. So I don't really bother. If I read about it, great. And the other thing is the benefit of government spending on the markets can take time, right? So government spending can take time to feed through. If you're trading the S&P, for example, things that the government are doing to stimulate the economy can happen very slowly and happen over time. It's very difficult to say, hey, that drove the S&P on any given day or any given month. Over time, you can say, obviously corporate tax breaks, and hey, the government just spent 100 million here, 200 million, that may have had a positive impact on the S&P over a few weeks or months. But how do you trade that? Very, very difficult. So it's not something I really follow, or many traders I know necessarily follow in a set format. They just read about it when it comes up. Exports and imports tend to be, depends on the country, okay? Obviously it is a driver of GDP, but it doesn't tend to fluctuate so much. Either you have, if you think about it, a country is either strong exporter or it's a strong importer. It relies on goods from outside. Obviously, if it relies on typically a lot of goods from outside, it's going to persistently run a trade deficit, right? So look, you know what? Let's stop there, because we're going to talk a lot about this. My point is that, can you see, in terms of the data, really important you realize this, we're focusing heavily on consumer spending, with a lot of this data that we're looking at. Housing data, retail sales, payrolls, it's all consumer focused. Business investment, things like the manufacturing and services surveys. Inflation obviously covers all the sectors as a whole. Government, we're not really looking at it too much. And then can you see, we've left out exports and imports. So I'm thinking, hey, why don't we just, can you see why I explained all of this to you? It's a long-winded way of me saying, let's just put it in here so we can complete the whole picture. And then we've got it all, right? We've got it all there that we need in case in the future exports and imports trade becomes an important factor. Right now, the market is just not focusing on it. And part of that is, especially in the US, they're just persistently running a deficit. Is shaving about 1% off GDP per year. Traders know this. They're not going to get any new information every time it comes out, so they don't really pay much attention to it. But in the future, that might change. So, like I said, positives came out of me losing the recording and stuff, and I realized, hey, let's make this even better. Let's just stick this in there. The one we're going to put in, if it's okay, is that let's put trade balance. The way it works is it's the goods trade balance comes out first. Okay, so we'll put the schedule in here, and then about 5 days later you get the overall trade balance, which includes services. Goods is typically a large proportion of it, so let's have a look here. So trading goods makes up, there you go, 75% of total trade. And then you can see here trade balance data is reported 5 days later. So this is just the goods trades balance, which is pretty much the main focus because it is such a large part of trade. So let's put that in there. Release. So you can see I just copied it, copy and then paste in here. Okay, paste as match destination formatting. Don't know why that's happening. Sorry about that. Okay, released monthly. Didn't copy it properly. Copy, go in here, paste, match destination formatting. About 30 days after the month's end, so it's released monthly. This is December's data released in January, a month later. Hopefully you're seeing a pattern here, right? You can see why, even though I say a lot of things, it's important because patterns are being shown here. Can you see why this piece of data might not be as important as some of the early data in the month? Pause this video, try and have a guess as to why you think this data may not be as important. Okay, so now you can may have pressed play again. It's because, look how late, we talked about this a lot, how late in the month is the data being produced. You know, let's say this is, you can, any month, whatever month you're in, let's say it's March. Okay, before, the month before was March, and this is April now, right? We're now in April. So manufacturing data has come out straight away for March, right? In the first week of April. Amazing, very helpful for us, giving us clues as to how the economy performed in March. Brilliant piece of data. Can you see why so many people watch it? Services, payrolls, great. It's come out early. CPI, yeah, all right, second week. We got some inflation data for March in the second week of April. Can you see retail sales then? Oh, it's about 3 weeks later, but okay, fine, fair enough. Look how late a lot of this data is. Trade balance is almost 4 weeks late. It's another reason why sometimes it cannot have so much focus. You know, I gave you a whole reasoning behind why I don't look at the trade balance, and because we've had a persistent deficit and there's not much fluctuation or new information. You know, we're not jumping between a surplus and a deficit and a surplus and a deficit and things like that. And I already know every single month the trade balance is going to be a deficit and it's going to shave around 1% of GDP. It's not really giving me any new information. But the number two reason, so number one is persistent deficit. This is for the US. Okay, the other reason, the main reason, is time. Look how late it's being reported versus everything else. It's a whole 4 weeks later, and that's why sometimes it can get forgotten, right? So I wanted to make that a point of why as well. Market doesn't have a lot of attention on it, even though it is quite an important number. So what we're going to do is we're also gonna, you got two options. Obviously you can use this format painter. If I just expand this, see that format painter? If you click on that core PCE, format painter, click on trade balance, or you can just obviously do it in the slightly more long-winded way, which is, sorry about that, to make sure I'm not covering anything, right? Great. Or you can do it in the slightly more long-winded way, which I've obviously just highlighted there as well. In fact, I haven't. So basically you could just do that. You can change the cell to all borders. Okay, that gives you the border, and then you can put the color in right there. You can see the yellow color. Okay, and you can make it bold. Bold. So the format painter obviously just allows you to do it all in one go. Then here, we're just going to put the cell outside. Get rid of that. Came in by accident. Okay, so you've got the trade balance now. The other thing you need to do is save it, right? Obviously file, go to file and then save as. Make sure you save this, okay? I've saved it. Here's G7FX fundamentals dashboard, okay? And then in brackets I've put envy and, you know, whatever. Save it, just make sure you save this, okay? You do not want to lose this. You're going to be using this for a long time. Now what we're going to do in this section is actually what I wanted to do in this section, which is I want to go over and actually check every single thing. And in fact, you can see how real a lot of this stuff is. I haven't even, you know, I don't really plan a lot of this stuff out because I want to make sure that everything in my mind is coming out. And the reason I'm saying this, because I'm actually thinking whether we actually split this now. Let's do this, okay? Because this has ended up being quite a long section now where I've explained why I wanted to put the trade balance in. It's almost become an extension of the last section. What we're going to do, let's spend about 10-15 minutes now just cleaning up this sheet, making it a final perfect calendar template for us. And then I'm going to do in the next section, and we can just literally hit the ground running, is we're going to check every single one of these items and make sure they follow a predictable pattern every month for the whole year, right? And then we know we can rely on this now going forward forever. Obviously, unless there's a drastic. Last time I used a joke, said unless civilization completely changes. But I'm gonna show you that this is something you can rely on now You're going to be miles ahead of anyone else when it comes to fundamental data, and I'm going to show you that. Let's actually just clean this up a little bit, okay? So, bit of admin, right? Number one is save it. Obviously, call it whatever you want. Don't have to call it what I've called it, but call it whatever you want. Number two is let's give it a title. So, what I want you to do is here, let's expand this a little bit. In fact, let's clean this up a little bit. So expand this out, okay, column 3 here, just highlight the whole thing, click merge and center, okay, and then in here, let's call this, I'm quite a big sucker for neatness, as you can probably tell. G7FX fundamentals, sorry, start again, G7FX fundamentals dashboard, okay. Let's change the color of that. Okay, and in fact, you can do whatever you want, okay, don't have to copy me, but you can if you want. Absolutely fine for you to do exactly what I'm doing. Okay, just make sure they're centered. It's centered because otherwise it could be to the left, it could be to the right. Just make sure it's centered. Even this could be up, down. Just make sure both of these are centered. Drag this out to whatever size you want. Maybe around, you can see the height there. Maybe around 22, 23, whatever you want. Okay, so you got your fundamentals dashboard. You see, it's nice. It gives it like, just really nice, makes it look nice and neat and professional, right? We're very professional here. Give that a semicolon, secondary, primary, typical month, that's fine. Just looking at my other dashboard on the side, make sure I'm not missing anything. No, that's fine. Okay, and you can play around with a lot of this stuff here, the width. If you want it to be different to me, I don't mind. This is how I keep it, but obviously you can play around with this. If you've got a smaller screen, larger screen, don't worry about it too much. You can make this a little bit smaller if you want, and play around with it so it fits to how you like it. Again, you don't need to make it exactly how I do. Right, so what I want to do, I said I want to spend about 10-15 minutes clearing this up, and we're going to go through the due diligence and make sure everything's in the right place in the next section. What I would like to do, right, and do you remember I said about how I lost the filming and I realized how I can make this even 10 times better? One of the things I think that's really going to help you, that has helped me in the early part of my career, is focusing on the data that traders really care about, okay? And I mean really care about. So yes, housing data, industrial production, PPI, minutes, unemployment claims, all these things are important. But what you want to do, right, is ultimately, the way that I really became good at, a lot of people ask me when I do Institutional Sundays, they're like, Envy, how do you know this stuff so well? Look, bottom line is, I am not smarter than anyone else. What I do well and I'm smart about is I realize I will never be able to be good at everything. And I think that's the biggest mistake traders make. They want to be good at everything and it's impossible. Pick things that matter and become good at those. So almost I sat myself down and said, right, if there's 5, 6, 7 pieces of data, and if those were the only things you were ever allowed to look at, which would they be? Okay. So when I looked at it through that lens, I realized very quickly, and it actually helped me a lot, because I realized when I watched obviously the market moving and reacting and speaking to other institutional traders, I realized all they really cared about, I barely heard them talking about anything apart from these things in this section. And it's almost why I put them here when we were building it. So what I think would be very beneficial for you to do is to start thinking in those terms, okay? And that will be very helpful for you, especially if you're new to fundamentals, even if you're not. Analysis paralysis. Don't do what every other guy does. Focus on the most important 5 or 7 pieces of data and become the very best at understanding those, because that is what's going to get you miles ahead of anyone else. So what we're going to do, I want you to highlight this section, okay, and I want you to press, I think it's data, and there should be a function called group that, okay. Okay, so that is going to, can you see, just group that little section. So highlight that, just again, group that, okay. So it closes that section out. So it's going to make you focus on the primary. Now, one other thing, let's do this. So the way I like to look at it, and again, this is just particular to me, it's not, you know, gospel, it's not rule, you don't have to do it this way, but if you want to see how I do it, this is how I like to do it. Even though I've put primary here, okay, and I've put secondary here, you know, this is from years of experience. What I've noticed is, if I had to pick two things that the market cares about every single, the biggest movers, and I was never allowed to look at anything else, it would be this: payrolls and the FOMC decision, okay? So to me, those things, I need to know better than anyone else. You know, even if I don't spend a single minute on anything else, those are the two things. So to me, you know, those are really my primary things, and that's what I would suggest. So that's why I put them in red, okay? So you can even see here, we're going to build this together, really exciting. We're going to be building out payrolls, and we're going to build all of this together in the next few sections. Can you see I've got it in the red tab, okay? That's because those are the two things that I care about more than anything else. Okay, so put those in red. So you could, in theory, my point is, have this as primary, this as secondary, and this as tertiary, like a third thing. But I don't want too many columns. We don't need to. We can use the colors to our advantage, because it's perfectly understandable what I'm trying to do here, right? So red is primary. Okay, that is the first thing I care about when I start to analyze or think about economic data. I'm first thinking about, okay, what is the jobs market doing? Why? Because as I said to you about C plus I plus G plus net exports GDP equals, consumer spending is about 70% of what matters in GDP, and therefore I want to know, have consumers got jobs? Are they spending? And every other trader I know, that's why payrolls is so important. So have that in red, have that in red. Manufacturing services, CPI, retail sales, and obviously the GDP release itself, incredibly important, much more important than these things in yellow, but slightly less important than payrolls and FOMC. So I have them in a different color. So they are really my secondary items. But come on, you know, we can manage looking at more than 2 pieces of data a month. We have the capacity to look at a few more. And the market does like to look at them to an extent. You'll see this because I'm giving you, you know, one of the things, if you noticed about Pro and Foundation, is the thing I gave you was the framework that you can then go and learn about the market through. I'm now giving you this amazing framework, because what you're going to start doing from tomorrow or next month or whatever, every time you look at data, you're now going to start thinking about payrolls first, FOMC first, and what you're going to notice is you're going to notice the market movements or reactions, or even leading up to these days, you'll be like, oh, I can see now, this is what the market is really reacting to. Because think about it, if the market is moving and you're trying to attribute that movement to every single piece of data, you're going to be so lost. You don't have any idea, and you can see why most people get completely lost. Whereas if you cancel all the noise out and just say, right, it's all about these things, and I'm going to watch the market movement, you'll start to realize that that is what the market is reacting to, is these big pieces of item. And then these, we do get reactions, but my whole point of saying all of what I said is you'll notice the market reactions are a lot smaller, okay? You know, even in week 4, okay, you'll have some GDP data, but the market is really starting to think already about week 1, these items, okay? Now, my point is that I like to put those secondary items in this color, because I want to watch them, because they will give me clues as to how the economy is shaping up. But ultimately, I've noticed the market reactions are, you know, relevant and obviously material, but not anywhere near as big as they are for those. Sorry. Let me just, I think I accidentally got that. Yeah, just get rid of that. Sorry about that. Then we've got things where I find the market barely reacts to, but they give me good clues as to what these pieces of data may be. Okay, do you see that now? Because remember I said GDP equals, you know, C plus I plus G plus net exports. If I know what exports are, then you can see I'm already likely to get a good clue. Now obviously the export isn't a great example because it typically tends to be persistently at a deficit, so I already kind of know that that's not going to give me a lot of clues into how GDP may vary, because I already know every time it comes out for the quarter it's going to be maybe a 1% for the year, sorry, a 1% reduction in GDP, and we'll talk about all of this. Don't worry if it doesn't make sense, but these little things, you know, PPI and claims, and these little things give little clues as to what these pieces of data may be. Okay, so that's why I like to look at them, and some traders do look at them. So what we're going to do is we're just going to hide them for now, right? Because we want clarity. But also what we're going to do is we're going to turn these yellows into whites. So I'm going to change them to no color, because I think the yellow makes them stand out too much, almost as if they're very important, and they're not. Can you see nice and clear now? It's optional. If you want to look at them, look at them. If you're not, don't worry about it. They're not that important. And when we come to building these tabs, can you see I've got them here? Housing, PPI. Can you see I've just got them in grayed out? Because they're not as important as the ones in orange. And the ones in orange are not as important as the one in... Can you see we're doing some amazing work here that no one else does, right? And that's the whole point. And hopefully you don't see this as me waffling on, and you actually see this as me giving you some incredible foundation and basis for you to develop some of the very best fundamental understanding in the world. You cannot do that unless you have a good template to build from, okay? Otherwise what you do is you're going to be like everyone else, and you're going to be presented with this. Now, even I can't make head nor tail of that. What is going on there? I don't know. It's just a bunch of words. I have no idea what that means. Whereas if I have this, look at that. All of a sudden, and I can even hide that. All of a sudden, I've only got 7 pieces of data over an entire month that I need to be concerned about. Control Z that. I'm on top of things now. I feel a lot more motivated. I don't feel, so bogged down in loads of data. It's like, wow, you know what? Not only that, I now know what to look for every single week. I want to just, ladies and gentlemen, just the last thing I want to say, this is really an insight into what I saw the very best traders in the world doing. Okay, when I worked with some of the best institutional traders, I mentioned before there were some guys doing hybrids and they were a mess, and I never understood why they did it that way. But the very best, this is what I saw them doing. They knew every single month, week 1, manufacturing services, payrolls, week 2, inflation, week 3, retail sales, week 4, advanced GDP, every quarter. FOMC will obviously vary. That's it. They knew that. They knew what it was all about. They knew what it was likely going to tell them, and therefore they could start formulating some sort of plan. And that's how they basically went from a mess to actually getting somewhere. And you remember, I talked about on that slide on the PowerPoint where I said you've got, kind of the retail approach here. You've got institutional, kind of hybrid, and then G7, but very best institutional traders. And I said, I'm going to drag you from there to there. That's what I'm doing. I'm dragging you from here to here. Hopefully that's very clear. I'm really happy actually with how this table's come out. Hopefully you also agree that it's very, very neat, nice and useful. So what I want you to do, final thing before we move on to the next section, if you're the first time you're looking at this, I only want you to focus on this, okay? Anyone can do it. 7 pieces of data in a month, right? Anyone can do it. In a whole week sometimes, all you've got to focus on is 1 piece of data, okay? That will make it much more manageable for you, and it won't be like, oh my God, I've got all this economic data. No, one country, one piece of data for the week, understand it, become the best at it. Imagine how much time you've now freed up to read about it. You're going to know more about inflation than anyone else, and inflation happens to be maybe the biggest driver that week of the markets. Can you see? Right, this is how you're going to get yourself to the next stage, is by doing it this way. Make it manageable, and the irony is it's actually easier to do it this way because you're only following one piece of data potentially in a week. Obviously week one will be a little bit more data heavy, and then week 3, week 4 will calm down again. So final thing just to mention is, look, focus on these 7 pieces of data, okay, for now, if you're new, and then slowly what will happen, you can open this up. As you become familiar with those, you can introduce these into your understanding. And I realized it was important for me to do this because all these years I've been looking at, obviously I've gone through phases, as you know, in the Pro Foundation, as I mentioned, I've gone through phases where I've not even looked at economic data, but currently I am incorporating a lot of it into kind of just how setting up the week, you know, not necessarily intraday, but whenever I have looked at it, I've always been looking at all these things, and I just kind of took it for granted that early in my career I was focusing on 5, 6, 7 items. So I realized it probably makes sense, you know, now that we're going to go on this journey right from the start, focus on these 7 items, introduce these items later on, maybe in 6 to 12 months time. In fact, if you remember in the Pro Foundation, we did a business plan, right? Let's do that. Let's do a fundamentals business plan. I haven't even decided the name for this section, and I may call it fundamentals business plan. In fact, let's do that, okay? So months 1 to 6. This is how I want you to set your stall out, okay? 7 items. This is assuming you're following the US. Obviously, if it's another country, find the top 5, 6, 7 items. Okay, that's all I want you to focus on, the next 6 releases. Obviously for GDP there'll be 2 releases because it's quarterly, but 6 retail sales. FOMC there might be less, obviously it's not every month, so you know, maybe 3 to 6. CPI 6 releases, payroll 6, 6, 6. I just want you to focus on these and not care about anything else. You'll be astonished how your fundamental knowledge will go through the roof, because you won't be wasting time on things that traders don't care about, okay? They really don't. Bloomberg, CNBC and all this nonsense want you, and other retail traders want you to think that those things matter. They don't, okay? These things don't matter. These things feed into the things that matter. So let's look at the things that matter, okay? So that's number 1, months 1 to 6. Months 7 to 12, then I want you to incorporate these items, okay? Because then you're ready. Then start to incorporate these. What, 1, 2, 3, 4, 5, 6, 7, 8. And obviously you might have chosen what will happen in the first 6 months as you're watching the markets and watching this and watching that. You might find other things that you think, oh, actually, I want to keep an eye on this or that. So it might not be the exact number of items that I've got here, right? So you've got 8 items there. But anyway, we're going to put it here, 8 items. Okay, so I don't want you to start looking at 15 pieces of information a month. It's going to be too much. Kind of take it for granted that I do, because I spent so many years becoming very good at these pieces of information. I'd even go as far as saying, if you become excellent at knowing these 7 items, that is, you don't even need these other things. You will know more than probably, you know as much as the very best traders out there, and that's no exaggeration. And you'll start to know this. You know, you don't take my word for it. As you start following those 7 items, you'll start watching in 3-4 months' time. You'll be watching and reading fundamental analysis, and you'll be like, wow, I really understand this stuff now, because I didn't get bogged down on things that don't matter. I understand GDP, I understand retail sales, I understand the FOMC, I understand inflation. Oh, those are the things I've just been focusing on. And you'll notice that's what traders care about, is these items. So, all right, ladies and gentlemen, I know that went on a long time. You can see I'm very passionate about hoping that you guys improve your knowledge, and this is, I know it's going to help you, and that's why I go on and on a little bit. Really excited to see you implement this over the next 12 months into the business plan that I just laid out for you. Now what we're going to do, very, very important section, is I am going to get you to do an exercise, which we're going to do together, where I'm going to get you to map all of these things out, okay, and show you categorical evidence that these things fall in the same place every single month, okay? So rather than me go on about in this section, let's end it there. Obviously take another break, relax, maybe come back in another few days or in an hour or whatever, and let's go and do the due diligence section where we're just going to double check the mapping.